Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on euro currency. So today in the fundamental report we have considered recent Fed statement, CPI numbers, and have come to the conclusion that Fed now stands in a very difficult situation. Particularly speaking, if you would like to know the details, it of course makes sense to read the report. In two words, that we suggest that in the first quarter of 2023, Fed would appear in a situation where it will have no room for action, actually. This is because the rate will remain high, structural component of the inflation will remain high, reserves and strength margin currently that it still has in a way of the United States Treasury reserves on the Fed account will exhaust. Bond market stands in an anemic situation, and actually Fed Reserve was not able to fulfill the targets, to reach the targets of the new borrowing on the bond market. And the negative situation that some processes that now stands in the economy will catch up with the current rate, which now is near the 5%. So because the negative effect that we see now, it doesn't correspond to the current rate. It's a bit lagging for 1-2 quarters, because until the rate was below the 2.5%, its average rate was very low, and currently we see effect only for the rate around 3.5% approximately. So the major effect is still yet to see. And we think that it will be really in difficult situation. So do not pay attention too much to the forecasts of the Fed that they intend to keep rate for a few years, maybe see what will happen. Because have you ever seen when the Fed forecasts been executed? They can't forecast even for 6 months. Just recall that they have promised us that inflation will be transitory, and that's all. So I think that we should not pay attention to forecasts and currently major expectation of the more hawkish Fed steps in 2023. But very soon Fed will meet really big difficulties, which will force them to stop rising rate and maybe even to turn the easing. That is most optimistic scenario if nobody will default. I mean the big companies, some big banks. If we will see some big default or crash on the market, that will be much worse. And the same story about the European Central Bank. So they also expect a rising of the rate somewhere to 3.25, 3.5% as a terminal rate. But it doesn't mean that definitely will reach them. So let's just remain careful and see on the statistics and the numbers that we will get. Speaking on the technical side in the short term, on the daily chart, I would mostly rely on the dollar index because it's more representative than euro currency chart. Mostly because on the dollar index we have clear patterns, which we do not have on the euro. And we already talked about this. This is free drive buy and grabbers on the bottom. That's just upward continuation. This at least brings us some confidence that probably downside action on the euro should last a bit longer. Of course, we hope that this is starting point of our bread and butter that suggests retracement on the dollar index somewhere to the 618 resistance of the whole downward action, and the same performance on the euro currency. Although I even hope that it will be action to the 90 below the parity, because we have important target that hasn't been completed. But we will see. If at least minimum target will be achieved, it already will be big achievement actually. So, and I really keep fingers crossed that should be actually the starting of the bread and butter trade, and that should be the reversal. At least currently everything goes well. We have potentially bullish reversal pattern, we have grabbers. That brings some confidence that we theoretically could try to take the position, because at least market should complete the free drive target and grabbers target, which suggests slightly higher upward action. That's what about the daily. Take a look that on the daily chart trend turns bullish, so it means that the euro currency turns bearish. Simultaneously on the weekly chart we have the bearish stretch pattern, I mean on the euro currency by the chart Napoli. It means that we have also bearish context on the weekly. On the 4-hour time frame chart of the euro currency, trend also stands bearish. And here actually we also could keep an eye on this a bit greater pattern, so it might be large head and shoulders, where entry point potentially might be at the same point, because if we keep the harmony of this pattern, the top of the right arm should be also around 105.70, 105.80 if this pattern will be formed. But the entry moment will be significantly later, not at this moment, so you need to wait for the market collapse back to the neckline and start the pullback, and only at this point you could consider taking the position. That if you would like to wait for a hand shoulders on the 4-hour time frame chart. Alternatively, you could try to go step by step on the hourly chart, trying to catch the minor retracement and taking the short positions. Because as I said, on the dollar index we see some room that market could proceed higher, and that brings confidence that theoretically we could try to take a position in lower time frames. So it means that on hourly chart, take a look what we have. Euro currency has broken this consolidation relatively fast, and you can see how easily the bullish view on actually based on the European Central Bank comments have been reversed. So just reaction on the Christine Lagarde's speech has been reversed fast, and then the market starts dropping lower, suggesting that Fed is more hawkish and its dollar is more attractive. Indeed, by even the analysis of the comparison of the terminal rates on the Fed and European Central Bank, it's also advantage is 2 times greater in favor of the United States dollar. And let's take a look. That was our suggestion for entry. If you remember this ABCD pattern minor, we said you could consider this level starting from this to the 106.90. This also fib level was from this top to this bottom, where you theoretically could consider taking the short position. So this first entry has happened, market is collapsed. If you have missed this opportunity, you could consider another one. So here you see the stands short-term target. This is 618 extension of this big ABCD pattern. And simultaneously, this is also the butterfly target. It combines in one point. That suggests at least the minor pullback. So it might be either to this level or maybe confluence. Market could retest this trending line, something of that sort. And you could consider probably this combination for taking the short position as well. So we will see. Situation stands very interesting, and personally, guys, I hope that will turn to monthly bread and butter trade.